Hello and welcome to Market Think Tank. We are proud to be one of the most successful technical analysis community in Pakistan, teaching you the skills to be more confident, effective and informed trader. Join our community of hundreds of traders nationwide working together to learn charts, generate profit and achieve financial independence. For access to daily blog discussions, visit our website. We look forward to seeing you. Let's check out some charts. Good day everyone, thank you for joining Market Think Tank. My name is Ehtesham Khan and today I'm going to discuss S&P 500 index trend analysis. We really going to see whether the S&P 500 has entered into the bear territory. Last year in December 2018 we witnessed the stock really plunged from the top. It made a high on September 29.40 and since then it was under pressure, so stock really fell off a cliff, and that was called a Christmas crash of 2018, where stocks hammered off significantly, and later on we got a very good recovery. Market recovered from the low of 23.51 till 26.15-20, and right now it's trading around 26.30s level, which is just a 50-day exponential moving average. So whether the stock has genuinely recovered from the low, or is it still just a correction in a downward trend, let's check out in chart in detail. If we just look at the number here, the S&P is trading around 26.16. Year-to-date return is around 4% so far, and today is 17th of January. If we just look at a long-term trend of S&P 500 index, so this is a long-term support. If you just consider this long-term support line starting back from 2011's low, which is around 1074 levels, and connect this 2016's low of 1810, we got a breakdown here initially, and we witnessed a massive correction afterward. Later on pullback and index came above the support line. If you just recall on our blog section, we mentioned on our blog as well, the long-term trend line support has broken, and afterwards we saw a massive decline in S&P, and it plunged from the high of 29.40 to the low of 23.50. So we witnessed a massive correction afterwards. Later on pullback we witnessed. If we just convert chart on a weekly time frame, 29.40 was the good high that we witnessed in September 2018. In fact, it was sort of double top. We got two consecutive high of 29.14 after a span of 3 to 4 days, and once the double top happened, later on we got a correction, and that was a deepest correction. So in the first leg, S&P fell off till 2600 lows. Then we got some pullback, some support around these areas, and came down again in second leg. This is the area where we witnessed some support earlier on. This whole shaded area, if you just look at closely, it declined in first leg here, then a range bound activity within this shaded area, and plunged back again in a second leg. So it is a 3-wave down move so far, because so if you just look at the overall pattern here, so we need to figure out on the Elliott wave trend analysis. As we know, there is always a motive wave and then the corrective wave. So there is a main trend, and against the main trend there is a counter trend, and S&P is now going in a counter trend. which is a corrective wave. So we need to find out which corrective wave it is. So as we know, there are 5 waves up and followed by 3 waves down, and similarly in 3 waves we might get some 5. So if you just look at the Elliott wave correction pattern, we have to see a counter trend as well to find whether it is a zigzag pattern, which is a 5-3-5, and initially we get 5 wave down like this, 1 2 3 4 and then 5, or 1 2 3 4 5. It's a 5-3-5. This is just the first leg, and then the third wave up, and then 5 again. So it's a 5-3-5. Or in a flat pattern where we get 3-3-5, basically 3 waves down. So first one is 3 wave, and then upward 3 wave, and then 5 wave down the road. Or a triangle contracting pattern where we get A, B, C, D, E pattern, and every single wave is 3 wave. It's like A, B, C, D and E. So it's a contracting triangle pattern, and each wave consists of 3 different waves in A, B, C. So if you just closely look at the S&P trend right now, we've got slight variation in a flat pattern, which is actually a running flat down here, where wave C terminates below wave A. And by the way, this is the area where we got some support later on, and right now market is facing resistance down here. And if you just look at the Elliott wave perspective, so it is a sort of running flat. It is a sort of running flat where wave C terminates below wave A, shows a sign of extreme weaknesses on the downward trend. So wave 2 completes here, and we are going in wave 3, and probably we are getting some minor degree motive structure inside this wave 3, because here on this zone we are getting overlapping. As we can see, this area, wave 4 cannot overlap the territory of wave 1. So it is the violation of rules. So obviously we have to see the alternative. If you just look at the current pullback, so it's a 3 wave up, initially in A, B, C pattern. And if we just look at the pattern of this trend, so apparently we have got a rising wedge on the current pullback, where we have got ABC structure so far, and any break below this level may provide a target down deep the valley, something like here. So if you just look at the Elliott wave perspective, we can easily see that it is coming down in wave 3 probably. Also we have to gear it up with the backup and alternative count as well, but probably it is the wave 3, and we are getting some minor degrees wave within this wave structure, because we got some overlapping down here. And as per the criteria, if this is a wave 3, it cannot be wave 4, because in this area there is a overlapping. So wave 4 cannot enter in the territory of wave 1. So it is something different, and obviously we have to look the other alternatives as well. So probably something big happening on the downside, or we can say it is the extension in wave 3, where we get this, the hold down is 1, and now the upward correction right now is in wave 2. On top of it, if you use a traditional and elementary technical analysis 2600 to 2700 territory is going to be very important. So in any case, for example, if we just add exponential moving average, so a 20-day moving average, exponential moving average is here, 50-day exponential moving average is here, and a 200-day moving average is here. So it is above the 20-day EMA and resisting around 50-day EMA. And 2630 to 2700 level is going to be very critical because it's a rising wedge upper resistance line as well, along with exponential moving average resistance. So in any case, if we just look at this number, so we have got a correction here down on these levels, and then any breakdown on these rising wedge will take down to the deep valley. Otherwise, the last possibility of the Elliott wave correction can be your ABCDE triangle pattern, is a contraction. So in the last possibility of the correction, it can be a contractory triangle pattern where ABCDE pattern we will get the first one A here, and then B up, C down, D up, and E down again, and then head for the fifth and the final impulse move. So in any case, the consolidation is long there. S&P is not going to get any higher level anytime sooner. At least 2940 is the cap for now, and we have to see how things unfold going forward. So this is it, guys. I hope you got something out of it, and if you really think this video is worthwhile, just hit that like button and subscribe to my channel, and write in the comment box if anything you would like to know. Take care. Bye bye.